All right, ladies and gentlemen, welcome this afternoon to the Money Show Virtual Expo. Today we've got Ryan Wilday, who has over 2 decades of experience trading equities, futures, and options. He began trading cryptocurrencies in 2013, and today he melds his deep knowledge of the cryptocurrency market with Elliott wave theory. In August of 2017, Mr. Wilday launched his cryptocurrency trading service on ElliottWaveTrader.net. Ryan, we're so happy to have you this afternoon. The floor is yours.
Thank you. And thanks everyone. Welcome back. If you heard me speak before, I think most of you know that I've been looking for 100K Bitcoin. If you've looked at all of my previous talks, and what I had to do here, because we're in a very tenuous spot in the Bitcoin market, which I will update you. However, I wanted to give you something to walk away with, actionable. And I want to talk about a setup we have in Ethereum, which it looks way better than Bitcoin. And I know I get asked about Ethereum occasionally on these talks. So this is gonna be a pretty quick conversation here, or presentation, and something very clearly actionable. And then I'm gonna do some Q&A. I'd like to offer you guys the presentation. So, well, the left QR code, if you are high tech, know how to use QR codes. Left code is a link to the service. And we, as always, we offer that service with 15-day trial of the entire site, not just the crypto service. And you don't even have to cancel because we don't take your credit card. You only need to put it in if you decide to stay. Check it out if you're interested. And then the QR code. I should say too, actually, the way I'm giving a setup here is like very much what I offer on a daily basis, and we have a few more setups in altcoins. So if you're interested in those, I would check it out. And then of course the presentation on the right. So if you want that, take that QR code. I'll leave this up for a couple more seconds, and I'll go back to it during Q&A. So you're not too late if you are reaching your phone. And then if you're low tech, just grab those emails, or grab those links and emails if you email if you want a link to want to get the presentation the old school way. So I'm going to switch, but I'll come back to this as I get to Q&A. Got a good introduction to me, so I won't belabor that too much. But you can read it if you want, if you're interested. A list of my calls over the years. The only one that hasn't been filled is still waiting for 100K plus. It's not invalidated yet, and well, one day it'll reach it, but so far it's been very elusive. But I've called major turns in the past, and even down to micro turns on a daily basis. But that's a little much for presentations like this. Just, again, always disclaimer, I am going to give you a setup in Ethereum that's going to be tradable more particularly, and that's not a recommendation to you. If you're not familiar with cryptos, how they move, how volatile they are, it may not be right for you. You're going to have to do your own research. That's kind of the gist of this. Nothing I say is a recommendation so much as education or an opportunity for you to evaluate on your own using your own research and perhaps your financial advisor if they're involved. All of my work is based on the Elliott wave theory. I mean, honestly, if you want to update a quick view of it, I would look at Avi's work, particularly Avi Gilbert's. You probably have seen presentations from him. Also, Wikipedia actually has a good primer of it, but basically trends move in 5 waves. This is true of all markets. They tend to correct in 3 waves. And more importantly is that they have a mathematical relationship one to another, each wave to another. And this allows us to define pivots in the market from which take trades that are very low risk and high reward. And I'm going to demonstrate that here today. Nothing in terms of any of this. I don't like to call it prediction, because in any given time, there is still an interpretation via the Elliott wave theory that comes from experience, which is fairly subjective. But there are a bunch of hard rules that are coded into the market, and the Elliott wave theory identifies them. And so some of those give us very clear sort of invalidation points for our perspective. So it comes with a subjective and an objective aspect to the analysis. And it's always that subjective side where we have to learn how to take, manageable, reasonable bets in markets with very clear risk management. And that's really the heart of what I teach in the service day in, day out. And I've gotten just great feedback from those that have come to understand this perspective and how to make these reasonable trades in the market at all times. This is the chart given in recent presentations, and if you've tracked me very clearly, we had a previous support level at the 24K region. It broke, and then we got down to 16K, and basically I lost a degree of fourth wave. It's a little bit of esoteric statement if you don't really know the wave theory, but we really have 16K in Bitcoin as sort of that's it for this bullish cycle. And if 16K is breached and sustained, and I'll talk about what that means in a second, what does it mean to sustain? But if it is, we have a higher degree bear market. Actually, what it means is that the bear market started in 2018 never ended. It's just simply that we had a false breakout in 2021. That's at least the Elliott wave definition, which is a little bit bigger to review, to look at from the perspective of this presentation. But I want to really emphasize that if 16K is breached and sustained below, I really have got nothing until support at 10K and then finally 3K. Based on, again, back to subjective interpretation, I can see a couple perspectives on the structure for each of those levels. So I can't say which one is higher probability than the other. Of course, we know the backdrop here is the macro with tightening interest rates and all of that. I don't like getting too much into the fundamentals because fundamentals can lead you wrong when markets are actually irrational, largely, other than their kind of structural aspects of the market. Sentiment can if you follow sentiment, sometimes bad news comes at the bottoms, right? The worst news comes at the bottom quite often. So in this backdrop of very bad news, we may simply see a bottom in this area. But what I can say is that the price action into this area is really not very solid. And so we bottomed in June in 17,100 to be exact, roughly. And since then, we haven't rallied what we call impulsively. So it makes breaching that low very likely. And it just, 16K is just right below that. Next shot is where we're at. We're at today. And, again, you could see that we're already sort of trolling those lows in June. The only way I can say it has bottomed, well, on the micro level, I don't see any sign of a bottom. But from an Elliott wave perspective, we could say, okay, we could get a truncated 5, and a truncated 5 means that the 5 didn't get lower than the wave 3. It happens fairly often, still rare. And to be honest, from a micro perspective, I see no sign at all that it is going to bottom in this region. So bad news is we are not on the road to 125K. That's why I made a quick flip to this presentation to tell you about the Ethereum setup. We do have a few altcoins, strangely enough, not just Ethereum, but a couple others that are saying, sorry, Bitcoin, have your fun times down at the depths. We're going higher. And again, as long as they hold support, we've got good setups. And I'm going to tell you about the one in Ethereum. So I wrote this article on Seeking Alpha just like last week, and you can peruse the article, but you're going to get the information here. Ethereum is parting ways from Bitcoin was the title of the article. And again, as I said, while Bitcoin is risking a breakdown below 16K, perhaps this 10K and 3K, Ethereum is set up to run. I promise to go back on what I mean by sustained. I can accept a sort of spike below 16K and reversal. In fact, if we get a spike below 16K and we sort of come up very quickly in the 24-hour period of time, say back into 17K, that's actually a pretty good sign that a bottom is in, just that we extended to the downside. However, if you start to see, if you're at all versed in technical analysis and you start to see price move sideways, chopping around below the 16 level or between say 17K and 16K, better believe the next drop is really confirmation that it is going to sustain below 16K. So that's the way I look at it. Support levels sometimes operate like on the dime, and then sometimes support levels you get spike and reverses. But when you start to see price, sort of consolidate below or chop around just in that level, and you don't see that strong reversal, it's a very good sign that reversal is going to break. So we're not there yet. We'll see what happens when we get there, but it does look like we are getting into the 16K, in the next, maybe even a week or two. In fact, I even called a put option. Some of us have been accumulating. I've been accumulating Bitcoin. I even called put option on Bido, the Bitcoin Pro Shares fund, just 30 minutes ago for my subscribers. This statement is strange. This statement that they're parting ways is strange to those that see the two coins, if Bitcoin and Ethereum, are highly correlated. I tend to see them highly correlated, but it just isn't true about the current action that we have. They very much began to decouple in June. That the decoupling specifically is sort of on a degree level, but more importantly, Ethereum came through 1700, which is a very key resistance level. It isn't above that level now. It's sitting in the 12 to 1300 region. I think it's at 1300, but it breached that level. And if you go back to the Bitcoin chart where I talk about that wave 4, it really was too high to be a wave 4. So it looks very likely that it has bottomed and is going to hold the June low. It's possible that it doesn't, but we'll go over the setup a little more specifically. But they are very much decoupled in terms of the quality of the price action. Incidentally, and a lot of people might say they decoupled because of what's called the merge. Okay, you can see I capitalized it here. The merge was a Ethereum software update that made it slightly more deflationary, meaning the supply is reduced, arguably more deflationary than Bitcoin. And when I'm using deflation in this situation, I'm talking about monetary policy. I'm not talking about deflationary economy. It's a good thing for a currency to be deflationary because it means it's less supply and therefore potentially higher prices. So this merge some people like, because they look for fundamentals in trading, which I really don't. They blame, quote unquote, or call it the reason for Ethereum's bullish stance. But what's very interesting, so I wrote here, incidentally, my qualitative view of Ethereum's sentiment is that it was euphorically bullish up to the merge. Okay, but we topped into the merge, which is always very interesting. That's the way sentiment works. And now that we have sort of quote unquote crashed out of the merge, which happened on September 15th, you can see now that the sentiment among Ethereum, I call them maximalists. We use this word maximalist in crypto trading, which is those that are very pro Ethereum versus Bitcoin. They're very defeated and bearish. When you have in the context of this bearish and defeatist sentiment, it's a great sentiment for a bottom to form. As I said earlier, the worst news happens near bottoms. So it's very interesting for me to see a setup, which again, I'll give you the specifics, to see a fairly bullish setup, but to see the sentiment of the marketplace very, very bearish. That's a very good context for coming out of support, and also for some of these people that got out. I was listening to a podcast last night where a big Ethereum trader got out completely, sold all his Ethereum. This is a good context for him to come back in chasing it. And we always need new money to chase the price higher if we're going to get a strong push. So it's a very nice setup from a price standpoint, which I'll go through, and as well sentiment is set up pretty well. So this is the essence of Ethereum in the same time frame I gave you earlier in Bitcoin. As long as it holds 1,000, I'm rounding off from 105.5 if you see this fib right here, which is the 786 retrace. We have a 1-2 set up, which points us. The literal projection is the 65.70. However, it's a stone's throw from a key target on the daily chart at 10.5. So I call this chart ideally gets to 10.5, but it really does at least project us to 6,500. And this is based on our Fibonacci pinball method we use for analyzing Elliott wave patterns, which was invented by Bobby Gilbert, if you're familiar with his talks. So that's the essence of the setup. We can go in micro. Here's the micro setup. You can see my count, and I really need one wave lower to make it a complete. It was teasing this morning about dodging that fifth wave lower, but what my point here is that's very timely. In my work, blue boxes is a support level. That's a place that's an entry. Basically, my charts and my colleague Jason's charts are always color coded in this manner. Red boxes are resistance levels. So once we come back in reverse, this is going to be an area to get through up to 2,200, and that should light the fire of the third wave, as we call it, which is the wave you generally want to trade. And then you saw a yellow box earlier, which is sort of profit-taking targets. There's going to be a lot of yellow boxes and red boxes as we go through the micro, because there's going to be a lot of other trade opportunities on more micro levels. But it's very timely here. Again, as long as we're in this region and we hold 1,000. As I said earlier, These support levels aren't guaranteed to hold, but this is about as good a setup we've seen long since we talked last year in what is it, the May or June timeframe, and came down. We've basically, at one point lost like 70% of the value. This is about as a good a long setup as we've seen in over a year, and at least for a swing trade versus just scalping or something like that. We expect one more leg lower, but what we do in this area is we basically scale in. So I've already been buying, and then I'll scale in as we get lower into the 1100 region, and then I'll get to my highest level position near 1000. I won't stop because I collect Ethereum for the long term. I won't stop out of all of it below 1000, but if we start to sustain below 1000, I'll stop out of sort of a more aggressive side of the trade. Any leverage I may put on will definitely come off, and then I'll stop out with some of my position, and then sort of the rest of it will go into cold wallets, go into my long term, because I'm also accumulating for long term as well in this trade. So that's kind of the gist. I mean, it's very, the only thing you wouldn't get from me, I'm giving you a good setup here. I don't think you're not getting from me unless you sign up, is the ongoing management of this trade should it play out. But I'm giving you the very clear parameters from a risk reward basis, which is, again, as long as it doesn't sustain below 1000, this trade is good. And you got to turn on your risk management if you get below 1000. Also, I would say size accordingly, because this is crypto, it's very volatile, and it's a 20% drop down to that 1000. So if you size up too heavy here and you lose 20% of it, you may hate me. And so that it's really up to you to size appropriately to your personal emotions and risk management and your financial situation. And that's something that I teach subscribers day in, day out. So again, the setup pretty clearly, and I don't know if I've ever given such a clear setup immediately in a money show presentation, but support is 1000. It must be held, at least if breached, it must be only via spike and reverse. And the target is 6,500 minimum with an ideal run to 10.5. Again, there will be a lot of micromanagement of it, the trade on the service as we go. And then, again, key takeaways, while we wait for Bitcoin to indicate a direction, we can take a trade in Ethereum. Trading successfully requires you are not stuck in common knowledge. As I said, a lot of people expect Ethereum and Bitcoin to always be correlated. Again, I generally do, but when I see it otherwise, I see it otherwise. And it's very clear, we can blame it on the merge or whatnot. You can blame it on whatever you want, but they have decoupled. This sentence just say, because Ethereum failed the merge news, which was very bullish, how can it be bullish? How can it still be bullish? The point of this sentence is, there's a very common perspective that when you crash out of news, that's it. Again, like I said, someone on a podcast that is a big Ethereum trader, he sold out of all of his Ethereum when it failed at the merge news. To me, that's a great opportunity to be contrarian. Especially when the price action itself is not bearish at all. Again, I emphasize here that trading is never a given, right? A trade setup is never a given that it goes. But what we can take out of the setup that I'm giving you is very clear risk to reward situation, and it's basically risking here risking $300 per Ethereum for a run of almost 9,000, or at least a minimum of almost 5,000 if we get to 6,500. That's incredible risk to reward, and that's basically the way we use Elliott Wave versus looking at it to say, okay, it's definitely going to hold this level or that. We can say, okay, here is a level that we use for risk management, and the reward side of the trade really outweighs the risk. As long as you're trading, like generally in most of my trades, I go for the 3-to-1. 3-to-1 risk to reward, potential reward versus the risk that I'm taking for every unit of risk, so to speak. And that's how I trade successfully over time versus, basically trading for win rate, if you will. So again, it's not a guarantee this works, but minimizing the risk, maximizing your reward will always help you trade successfully. I ran through this super fast. I'm going to take Q&A. Like I said, it's going to be short. But if you want me to go back on any of these concepts, again, this is incredibly actionable and timely right now. I don't know if I've ever given such a clear setup or had the opportunity to put a clear setup into a money show presentation, but here it is, folks. So I'll go back to the QR codes, and if there are any questions, I'll go ahead and take them. And if you want me to go back to any slides, just let me know, and I can get you back there and clarify the concepts.
All right, Ryan, wonderful presentation. We have a few questions here in the chat. First question is, what was the merge news? What merged?
Okay, it's very highly technical. Essentially, Ethereum has been what's called a proof of work chain, which is just like Bitcoin, where you've got these computers chunking numbers, chewing on numbers and making, solving random puzzles to win that Ethereum. And that's basically how the chain issues more currency. And of course, the miners are the ones that manage the transactions. Basically, there was another chain called the Beacon chain, and this was basically an experimental chain to convert Bitcoin to proof of stake. It's a different consensus mechanism. There are no miners, basically holders, validating holders of the currency. That's a whole thing, technical discussion itself. They are the ones that confirm the transactions. And then once the experiment was done, they were satisfied with that chain. They basically merged the two chains to where the proof of stake consensus mechanism was the neck mechanism, and mining died, so to speak. So anyone that was mining Ethereum was cut off. And there's lots of reasons for doing that. One, it helps a little bit with scaling. Two, a lot of people were going for environmentally friendly, because arguably mining is not, unless it's on all alternative energy. And of course, mining's been under fire. Crypto mining has been under fire by regulators. So there's a few other reasons, but as part of it, it also became very deflationary, as a lot more of Ethereum's getting burned for the sort of the fees that people use. A lot of the Ethereum used to pay for fees on the chain when they're doing like decentralized finance or whatever. Again, all of this is very technical if you're not aware, but it made it very deflationary because some of those fees get burned. So the currency gets burned in effect. That's kind of the gist. It's probably get some great YouTube videos on it. And I'm not a technical person either, but I know enough about it to mince words or make a word salad out of it.
All right, Ryan, we've got another question coming in, which is, if we do drop below 16K on Bitcoin, are you talking about a prolonged bear market for Bitcoin that will take years to merely come back to the 16K level?
I don't think it's necessarily years, but you're talking risk of losing another 50% to 75% of current. We've already lost 75% from the top. Bitcoin can go fast or slow through these setups, in these trends. I would think that the June low breaks, it goes to 10K rather quickly. I would imagine, because there's basically people go, not again, they start selling. If there's any leverage in the system left, I'm not sure there is, that leverage starts to get stopped out. It's going to be quite a waterfall. So we'll see. But I don't think it's necessarily years. Plus, we have to think about halving is when the issuance of Bitcoin drops, issuance to the miners, back to deflationary currency and miners. That inflation rate of Bitcoin drops by half in I think it's May of 2024. So it may be that we're, and there tends to be, it's funny because there's actually tends to be a mathematical, or basically a relation to pre-halving towards bull runs, and from by that determination, this November, meaning November 2022, should start the pre-halving run. So it may be that we get a drop to 10K into November if old cycles have played out. But none of those, that history rhymes but doesn't repeat, right? So we'll see if that happens again. But I don't think years. I can't guarantee it.
All right, our next question is, what evidence would you need to see chart-wise to say that we've seen the fifth wave already and we are in a longer Bitcoin bear market?
I forget the level, but from our Fibonacci pinball perspective, we're not even close to getting a fifth wave. I think it's close to $1 million in Bitcoin. Seriously. If I'm using the entire history from its 2009 Genesis through its early 1.2s, which was like into 2012, and the projection off of that brings it into like $1 million. So just from a Fibonacci perspective, we're not even close. We look for the 2.0 extension off in log off of that 1.2. Again, it may not mean anything to a lot of people, but those that are used to Fibonacci work know what I mean. And we just tapped the 1.382, which is really short even for a third wave, because third waves tend to reach 1.382 to 1.618 it's on the short end of third wave. So looking for a 5 wave, I'm looking for the 2.0. Well, 1.764 is the typical low end. And then I don't remember where it is exactly. I don't have my long-term charts in front of me, but it's like very close to $1 million.
All right, awesome. Next question is there an ETF for buying Ethereum?
No, there's only a trust in America, ETHE. I actually don't think it should be touched. It's it runs between a premium and discount. It's got a very deep discount. The chart is, as I say, janky. It's a terrible chart. I do own some, but I don't recommend it to people. I think just, suck it up, get a crypto account, go to Coinbase, or I prefer ftx.us. I mean, shoot, you can even do it on Robinhood now and buy Ethereum, or public.com is another kind of low-level brokerage account that you can use to buy. You can get Ethereum in so many easier ways than buying kind of a junk asset that resembles it and is not quality. And that's, again, if you want to not listen to me, ETHE is the symbol. I am not recommending it, though I own some in my retirement account. It just isn't very good.
All right, our next question is, how are you trading today now that the markets are crashing? Inverse ETFs?
I'm not a big short trader. My way of trading is always relative ways of long. So I've just been conserving cash very well. And, like I can honestly say one of the areas I've traded very badly is in miners, in Bitcoin miners. I got a little overexposed. I took a decent amount of profit in last year, but I'm looking back on, man, I should have took a lot more. But I mostly trade relative levels of long with some shorting. Like I said, called a put option trade. I just haven't, like when you are trading for a living, you've got to know what you're good at, right? And like I can honestly say I am not good at shorting, and that doesn't matter whether it's long an inverse ETF or a whatever. I just trade best relative levels of long, and then do some hedging with options. So that tends to be why I trade. I have actually worked this year in terms of improving my short trading, and I can say it's gotten a lot better. But my colleague Jason is a better short trader than I am, and he will call short trades occasionally. But I can say very honestly, crypto, though it looks in hindsight to be this great downtrend over a year, it's an incredibly choppy downtrend. If you were trading short, you'd have some quick hits and you'd have to be out. And so I'm not in for that. Like, it just isn't my style. So I've just been basically conserving cash.
All right, wonderful. Another question is, what are your favorite altcoins?
Right now we've tracking setups in Aave, BNB, and Matic, and that is it. Polygon, Matic, whatever you want to call it. It used to be called Matic, now it's Polygon. MATIC. Those are the 3 other ones we're tracking setups. Everything else looks pretty junky out there right now. It still hasn't established a good uptrend, reversal, whatnot, and so I give those setups on a weekly report. We track those setups. My subscribers have known about those setups for a few weeks now. We're kind of in the accumulation zone on all of those. I won't give the clear levels because I don't have them in front of me. That's going to be with subscribers, but we just like I gave you in Ethereum, I got 3 levels for all of those that where we turn bearish, but right now look pretty good.
All right, excellent information, Ryan. Great presentation. And for the free trial of the service, elliottwavetrader.net/cryptocurrency. And for more information, contact Ryan at info@elliottwavetrader.net.
And you'll actually, for that email, you'll get Tom, our customer service rep or VP. You'll get him directly. But if there's a question that you want to address to me, he'll get it to me, and then I'll follow up. That's just not my personal email.
Excellent. All right. Well, thank you very much, Ryan, and we will see you on the next one.
All right. Thanks, guys. Have a good one.